Okay guys, welcome back. This is video number 3 from the Northwest. So we are going to now look at question number 2, which is the cash flow statement. On the cash flow statement, we are not going to spend much time because we have covered this in the previous videos, so I don't want to be repeating things that I've already taught you guys. We have covered the income tax paid. We have covered the dividends paid. Please refer to the Free State and the Eastern Cape videos. The purchase of fixed assets, I think we also did that one in the Free State and even in the Eastern Cape one. The change in loans, the cash effects from financing activities. Remember, you would do good in most cases if you open a note number 7. If you know how to do note number 7, then it will assist you a lot. The net change in cash and cash equivalents, we have also covered this in the Free State as well as the Eastern Cape prelim paper. Please go through it, and I would want to encourage you to prepare a full cash flow statement, as the examiner can test either parts of the cash flow statement or the entire cash flow statement. All right, but then there was an interesting question which I saw here, which is 2.2, and then it says, in order to improve the cash flow, the CEO Jane Mbulistad stated that the board of directors are proposing 2 strategies. Number 1, issuing more shares and selling a large number of fixed assets. So they want to improve cash flow, and they have 2 options: either to issue more shares or to sell a large number of fixed assets. So the question then continues and says, however, as a shareholder, Ben has said that these strategies will not benefit the company or its shareholders. Explain why the shareholder, that is Ben, might be against the strategies of selling fixed assets and issuing more shares. So this is what they want us to talk about. Okay, so let's quickly go through it. Okay, so here are the reasons that were given why it is not a wise decision to sell fixed assets. Number 1, when we sell fixed assets, okay, let me just do it like that. When we sell fixed assets form the infrastructure of the business, which is needed to generate profit in a business. So the moment we sell fixed assets, it will affect our ability to generate profit. This is what this point is saying. So that is point number 1. We should not sell our fixed assets as it affects our ability to generate profits. Point number 2, the sale of fixed property will prevent the company from benefiting through capital gains, increase in value. Remember that the more assets that you have, then you benefit from capital gains, that is an increase in value. If we sell them, then we won't benefit through capital gains. Reasons against issuing shares. The moment we issue shares, number 1, it dilutes the returns to existing shareholders, as the profits will be spread across a large number of shares. This is very true. And again, if you look at the reason why we don't want to issue more shares is it will decrease the earnings per share or the dividends per share. This will decrease. This is likely to decrease the market value of the shares. Once the EPS and the DPS decrease, the market value of shares will also decrease. So it would also affect the shareholding percentage of some shareholders. Some shareholders who had a huge percentage shareholding in the company will also be diluted in this case. So these are the reasons why we don't want to issue more shares or sell fixed assets. I just thought I should touch on this particular question as I go on to the next one. The next one were the calculation of financial indicators, and the financial indicators that were brought in here were different from what we saw in the other papers. In the Eastern Cape and in the Free State, there are different indicators, but here let's see if we can do no, actually they are exactly the same. I'm confusing things here. These indicators are exactly the same. They're exactly the same. The asset test ratio, the debt equity, and the percentage return on shareholders equity. These are the same as the ones we saw in the Free State prelim. And I want to think they also had 4 marks, but I think this one had about 6 marks or something like that. So if you have done them already in the Free State prelim, you should be a walk in the park. This is how you pass an exam, by doing stuff over and over again, so that the next time it comes, then you can find it easy for you to answer. Okay, so I'm not going to waste time doing these ones because we've already done them, and these are financial indicators that you can calculate easily. So I'll then move on to question number 3. Question number 3, 3.2, it says you have 200,000 to invest on the JSE, and you have narrowed your choice down to 2 listed companies. Then they say, where comments or explanations are required, quote financial indicators, figures, and trends to support your answer. These are very important instructions. Required. Liquidity. Explain why you would feel that Wild Limited is handling its liquidity more effectively than Free Limited. So here they're bringing an aspect of comparison. When we answer such questions, we have to zero in on the comparison part. We have to compare. Quote 3 financial indicators to support your opinion. Comparison. You have to be able to compare. Let's see what the examiner wanted us to say. Okay, so the first indicator that we'll talk about, number 1, it is the current ratio. So we'd say the current ratio of Wild Limited. Okay, so you would see it over here. Here it is. That the current ratio, remember, this is a liquidity financial indicator. Okay, so the current ratio of Wild Limited is 1.8:1. This is what you see here. While that of Free Limited is 5.5:1, but Free is 5.5:1. Okay, so we are explaining why we feel that Wild is handling its liquidity more effectively than Free Limited. Then the second point, remember, we are looking at liquidity indicators. So the next one is your asset test ratio. Then you come here, then you say your asset test ratio of Wild is 0.9:1, while that of Free is 3.1:1. You have to understand that when your asset test ratio is this high, this is not good for a business. All right, so we are saying the asset test ratio for Wild Limited is 0.9:1, while that of Free is 3.1:1. Let's go to the third point. The third point is now saying the stock holding period of Wild is 79 days. You can see here, stock holding period is 79 days. This is good for liquidity, while that of Free is 180 days. This is too long, so it will affect liquidity. And then the next one, the last point, is the debtors collection period. Okay, you can see here the average debtors collection period is 22 days. Okay, the average debtors collection period is 22 days, while that of Free is 59 days. So the debtors are taking longer to pay in Free Limited, yet in Wild Limited 22 days. That is a good sign. So that makes it good for the liquidity of the business. Okay, I'm going to end this video now, and then when I come, I'm going to continue again with this question 3. I think we'll just do one more video, then we're going to wrap it up. All right, see you in the next video.